All right, everyone, here we are with ticker symbol Nndm, Nano Dimensions. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Nano Dimensions has been in a bearish run. There's been a lot of news that ARK Investment has been investing tremendous amounts in buying large amounts of shares and so forth. So if these top players are actually making moves and joining in on this stock, they know something that us average investors are unaware of, or we are aware of it, but just seeing a big corporation or a big investor or large investment being made just goes ahead and confirms that to us, right? It lets us know that there is potential in this company and that there is some type of growth. I mean, no one would put an investment that big into something that isn't going to grow, or at least give them something back than their initial investment. That's the whole point of the stock market, and that's what we're all trying to do, right? Put in $1 and get back $2, like I like to say. I know that's not exactly the analogy, but just to give you a simple term, it's just about putting in an initial investment and getting back more than what you put in. You put in $1 and you walked out with $2. But let's go ahead and look at this very closely, because it actually dipped. It hit a new low here, which is our new support levels. Very interesting. And it started to have a slight reversal here and pick up of volume from the bulls. It broke through the 50-day moving average, and it could be well on its way to break through yesterday's resistance over to today. And if they accomplish that, they can pull away to hit newer highs. Now, the highest point reached in this run of this bullish run here that we see, it was slightly below that. We're going to look at that closely too, but I want you guys to keep in mind 305, super important number. 305 is super important. Let's look at our new support and resistance here. So our resistance has slightly changed by a cent, and our support has changed quite a bit here. And we're going to look at some of the lowest points reached in the day so we can keep these numbers in mind and see what is important for Monday. So the 50-day moving average is 294. I'd write that down. As long as we are above it, we're in bullish territory. As long as we're below it, we're in bearish territory. So the bulls need to break through resistance to continue this run. They've done some reversal here. They're looking like they're staying above the 50-day moving average. If they hold up like that towards the end of the day, there could be an opportunity for the bulls to continue to pull away, but they need to break through 304, turn that into a support, and start to reach newer highs and new resistance levels. If they accomplish that, they are on their way to pulling further away from the 50-day moving average in an upward direction. So pay very close attention to that. And I want to emphasize the bulls need to break through 304 so they can continue to hit newer highs, new resistance levels, and pull away from the 50-day moving average. Now, on the other hand, we have what the bears want. And we are not that far away from the 50-day moving average, which is 294. And the bears want to break through that. If they accomplish that, their next goal is hitting through the lowest points reached in the day and also lowest point reached in this bearish run. So this is a very important number here if it gets broken through, because it was touched twice, but there was a support form. So if the bulls lose control and give that control and leverage to the bears to break through it, this could be on its way to newer lows and new support levels and pulling further away from the 50-day moving average in a downward direction. So I want to emphasize to all investors, as soon as this breaks through the 50-day moving average and gets into bearish territory, you don't have to go ahead and make a quick decision. You know, it's all about your risk tolerance, but pay very close attention to the behavior of this stock and how quickly is it moving to newer lows, or is there an opportunity for the bulls to reappear and bring this back up into bullish territory? Because the tug of war will be interesting and important to pay close attention to. Now, if your risk tolerance allows you to wait till it goes to this support level and it breaks through it, I want to emphasize to all investors, that's a dramatic change in one day or in 2 days if it happens by Monday or Tuesday or even later in the week, because this is the lowest point reached in the bearish run. And if this gets broken through, this could be on its way to newer lows and new support levels further away from the 50-day moving average significantly, because it will hit new lows that haven't been seen since this bearish run started, because the lowest point reached in the bearish run is this support level. So this support level is that significant. So keep that in mind. Pay very close attention to the behavior of this stock and how it's reacting, and if the bulls are even trying to reappear to stop this from hitting newer lows. Again, The bulls need to break through 304 to continue the momentum and pull away from the 50-day moving average. So keep that in mind as well. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit that like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.